Today's the 7th of March 2022. My name is David Hickson, and in today's market update we're going to be taking a quick look at gold and then the S&P 500 and the Nasdaq, and then we are going to take a look at the FTSE because I have a fairly unorthodox, even heretical idea to suggest about what might be happening in the markets, and the FTSE provides a good way of exploring that idea. It's going to be fun, a little crazy, and it might even ruffle a few feathers. So let's start by taking a look at gold, and of course this is the analysis that we've been looking at over the past few weeks, with an important peak that formed over here in about the middle of 2020. And as mentioned, I think it was in the update 2 weeks ago, I am expecting gold to come up into a peak of 18-month magnitude. In last week's market update, I suggested that the spike up that occurred on the previous Thursday might have satisfied the requirements for the 18-month cycle peak, but I did point out that we would first need confirmation, and I displayed the 20-day FLD, indicating that price would need to first of all cross down below the 20-day FLD. We have an FLD cascade pattern here where the FLDs are very nicely lined up, ready for the peak to form, and we would need to see price crossing down below those FLDs to confirm that the various cycles have formed peaks in gold. As mentioned in last week's market update, that had not yet happened, and it still has not happened, and gold has continued to move upwards. It's worth pointing out here that gold is often seen as a safe haven, and particularly in times of political uncertainty and with what is happening in the Ukraine at the moment. That is certainly what is happening at the moment. And so it is not very surprising to see gold increase in value. It is still moving up into this 18-month cycle peak, in my opinion. And you can see that the time is ripe for that 18-month cycle peak to form in the price of gold. But this highlights a really important point that I touched on last week, and I sort of rather brushed over it, and that is that when price is moving up into a peak, we first of all require confirmation that the peak has formed before we are able to say that that peak is there. It's a really important point, and it is perhaps the most important point that I'm going to make in today's market update. When price is moving towards a peak, or when price is moving down towards a trough, we need to be careful as cycle analysts. We need to be careful of jumping to the conclusion that the peak or the trough has formed and jumping into trades as a result of that. We need to first of all wait for confirmation, and that confirmation will be provided to us by the cycle tools that we have on our charts. There is one other thing that I would like to point out in terms of our expectation that the 18-month cycle peak forms at the moment, and that is the bar counts here. We have 279 days that have elapsed since the 40-week cycle trough. The average length of a 40-week cycle is 272 days. If you don't know why that is, I would encourage you to download the 10 Core Concepts document that I will place a link to in the description below this video. And if we pull this chart down a little bit, you can see that there have been 577 days that have elapsed since the important peak in the middle of 2020. The average length of an 18-month cycle is 546 days. And so we are about 7 days long on the 40-week cycle, and we are about 31 days long on the 18-month cycle. And so those cycle peaks are overdue. But if we measure the number of bars that have elapsed since the 20-week cycle that formed over here, then you will see that there have been only 111 days that have elapsed since that 20-week cycle in November of last year. The average length of a 20-week cycle is 136 days, and so we are in fact 25 days short in terms of the 20-week cycle. So this nest of highs is a little staggered, as you can see visually. Here is the circle for the 18-month cycle, there's the circle for the 40-week cycle, and the 20-week cycle's circle is over here on the to the right of us. In other words, it's still lying ahead of us. And that is the way in which nests of highs or nests of lows build up. And so our expectation of this peak forming is tempered by the fact that there are still 25 days that could elapse before the 20-week cycle peak is expected to form in the market. If we take a look at the 80-day cycle peak, you can see it's not a very clear peak in the price action, so it is probably not really even worth counting the number of bars that have elapsed, and the same thing is true with the 40-day cycle peak. They are not very clear in the analysis, and so it is not worth really counting the bars from those peaks. Now let's take a look at some stock markets, and we will start with the S&P 500. Let's start with this analysis, which, as you know, has been one of my preferred analyses. It has a very important, at least 54-month magnitude trough in March of 2020, and we have been considering the possibility that the 18-month cycle trough formed at the beginning of October last year for some time. This analysis would have us expect that the markets have been coming down into a 20-week cycle trough, which, as you can see, has now been confirmed by Sentient Trader in its analysis. And if we zoom in, we can take a closer look at that. You can see that the diamonds have now been positioned below this point over here. That is the Thursday of 2 weeks ago, when the trouble erupted in the Ukraine and we had price spike down and then bounce back up again. That spike was caused by some volatility as a result of the news, which is something that we often see. And so, in my opinion, it's a fairly questionable position for the cycle trough to form. Sentient Trader has marked it with a diamond, but again, this brings us back to the very important point that when we are expecting a trough to form in the market, we shouldn't simply rely on the fact that the software has positioned the diamond there. You can see that it is a hollow diamond. In other words, Sentient Trader is not absolutely convinced that that is the position of the trough, but it is tentatively positioning it there. I would prefer to wait for some confirmation that that trough has formed. And if we take a look at the 20-day FLD, you can see, and let's zoom in even further, that price has come up to that 20-day FLD, but it hasn't really very strongly crossed above it. It has crossed above it, as you can see. In fact, the median price on Thursday of last week crossed up above the 20-day FLD, but it's not a very convincing price cross, I'm sure that you will agree. And so, in my opinion, although you could argue that price has crossed above the 20-day FLD, in my opinion, it's not a very clear and obvious cross. And I would be looking for a fairly convincing cross before absolutely deciding that this is a trough of the 20-week cycle that has formed in the S&P 500. You can see that I'm recording this video before the markets open in the US, and so far in overnight trading, price has come down and has actually come down below the 20-day FLD. And so we are still not getting that confirmation that the 20-day FLD has been crossed, and so therefore I still have a big question mark over positioning the 20-week cycle trough there. As mentioned earlier, one of the big messages in today's video is that when we are expecting a trough or a peak, we need to wait for some clear confirmation before actually entering into our trades. It is quite possible that the 20-week cycle trough has formed and that it did form last week on Thursday. But when we look at the FTSE in a moment, you will see that other stock markets around the world are not confirming that. And that is a very big alarm bell that we need to pay some attention to. In the other analysis possibility that we discussed in the S&P 500 last week and perhaps the week before, I discussed the possibility that this was in fact going to be the 18-month cycle trough that was forming in the markets. You can see that again, Sentient Trader has positioned the diamonds for the 18-month cycle trough beneath the low on that, I think it was the 24th of February. But yet again, here is the 20-day FLD. I am not getting a clear confirmation signal from price crossing above the 20-day FLD, so I am still asking questions about the position of that trough in the S&P 500. Let's take a look at what's happening in the Nasdaq. Here is the analysis in the Nasdaq that we've been looking at in the past few weeks, as mentioned in those market updates, and I would encourage you to go back and take a look at them if you haven't seen them, because I'm not going to repeat everything, but as mentioned in those market updates, the December 2018 trough in the Nasdaq was in fact a lower trough than the trough in March of 2020, and so the bigger magnitude cycle trough has been positioned at that December 2018 trough in this analysis. We have had one and then two 18-month cycles that have elapsed since then. This is the possibility that the 18-month cycle trough formed in early October of last year. That means that we are now in our third 18-month cycle, as mentioned in previous market update videos, and that would give a reason why we are witnessing a slide to a more bearish cycle shape, because of course the third 18-month cycle will be the least bullish and probably the most bearish of the three 18-month cycles, which are going to bring us into the next 54-month cycle, according to this analysis, early next year. And so it is not a huge surprise to be seeing a bearish cycle develop in the Nasdaq because of the different position with the 54-month cycle. But again, in the Nasdaq, we have exactly the same situation as we have in the S&P 500. If I zoom in and turn off the semicircles, you can see it very clearly here. And let me display the 20-day FLD. We have exactly the same situation as we have in the S&P 500. That Sentient Trader has positioned a tentative 20-week cycle trough over here on that 24th of February low point that formed. And so according to this analysis, that is possibly the 20-week cycle trough that has formed. But again, here is the 20-day FLD. I am not seeing a very clear and convincing cross up above that 20-day FLD. And so again, I'm asking a question about the magnitude, or at least the phasing, of that trough that has formed in the third week of February. For the sake of completeness, let me show you the other possibility in the Nasdaq. And that is shown in this chart here, which I also discussed in last week's market update video, which is the possibility that the 18-month cycle trough is only forming about now in the market. And again, if we zoom in, we have exactly the same situation as we had in the S&P 500 and with the other chart in the Nasdaq, which is that the 18-month cycle trough has been tentatively positioned by Sentient Trader as having formed. And you can see I have influenced this analysis. I've actually pinned that 18-month cycle trough over there. And so it is possible that the 18-month cycle trough or the 20-week cycle trough might have formed there. But again, I am not seeing a clear confirmation yet. And so I believe that is a premature positioning for the 18-month cycle trough. Now let's take a look at the FTSE. Let's start with this analysis of the FTSE, which is the analysis that I presented many weeks, perhaps even months ago, when we last considered the FTSE. And that, of course, positions an important either 54-month or perhaps even 9-year cycle trough in March of 2020. We had a 40-week cycle trough over here in late October 2020. And according to this analysis, and as you can see, I have pinned it, we have the 18-month cycle trough that formed in July of last year. The possibility that an 18-month cycle trough formed in July of last year is one that we have discussed in many of these market update videos. I'm not going to dwell on it too much, but it works fairly well when we are analyzing the FTSE. That means that the trough that we are now coming down into in the FTSE is a potential 40-week cycle trough. As you can see in recent price action, really just over the past few days, the FTSE has broken down to new lows, and so this analysis works fairly well in terms of the FTSE, and it brings into question the possibility that the trough that formed in the third week of February, an unconfirmed trough in the US markets, there is that trough. It brings into question the fact that that trough is the expected trough that we're looking for forming in the markets at the moment. You can see that on Thursday and Friday, price came down, dropped well below that trough, and certainly in early market action today, on Monday, we are seeing price moving even further down. And so it is possible that this 40-week cycle trough still lies ahead of us. Now, this analysis works fairly well for the FTSE, and if we count the number of bars, you can see that there have been only 231 bars or days since the potential 18-month cycle trough in the middle of July last year. The average length of a 40-week cycle, as already mentioned, is 272 days. So we're looking at another 41 days or so for that 40-week cycle trough to form in the market. The number of days that have elapsed from the potential 20-week cycle trough that formed at the end of November or perhaps even beginning of December last year has been 97 days, and there are 136 days, of course, in an average 20-week cycle. And so again, we're looking at about another 40 days that need to pass before the 20-week cycle trough becomes due. There have been only 42 days since the 80-day cycle trough formed in this market at the end of January, and an average number of days in the 80-day cycle is 68, and so we are looking at another 26 or so days before that cycle becomes due. The result of all of these cycle counts is that we have a nest of lows for the 40-week cycle still lying ahead of us, indicating that we could see some fairly bearish action as price comes down into that much later 40-day cycle trough. But now we have a bit of an anomaly. As you probably know, I've mentioned it in several of the previous market update videos, around the fact that the markets are turning quite so bearish at the moment. If we assume that this March of 2020 trough was a trough of at least 54-month cycle magnitude, then our first 18-month cycle should, of course, be a fairly bullish cycle. The second 18-month cycle, which we are in at the moment, should be a less bullish, but it shouldn't be a cycle that turns nastily bearish quite so early in its progression. And this cycle, as you can see in the FTSE, has now been turning fairly bearish. This is an anomaly that I've discussed in previous market update videos, so I don't need to emphasize it. So let's take a look at the fairly unorthodox idea that I mentioned at the beginning of this video and consider what could possibly be happening. I'm doing a fairly fun thing over the weekends. I'm doing a series of classes in financial markets for young people, for children between the ages of 10 and 16. And over the weekend, we were measuring the distance between various low points in price, which is a very useful first step to do when you're performing any kind of a cycle analysis. Because of the principles of harmonicity and synchronicity, even though you don't necessarily know the magnitude of a particular cycle trough, if you measure the distances between low points in price, you will often find the nominal lengths that we find in the cycle analysis. And so if we measure the distance from this low point in 2003, I wonder if you know how many days there are in an 18-year cycle, an average 18-year cycle discovered by Hurst 50 years ago. In fact, the average number of days that he discovered is 6,552. If we measure forward 6,552 days from the trough in, or the low price point in early 2003, you will see that it is in early 2021. It's in about the middle of February 2021. So when you measure forward 18 years, or the average length of an 18-year cycle, and you're performing a traditional Hurst cycles phasing analysis, which of course he initially performed using scraps of paper and pencils and so forth, the first thing you do is you measure forward the average number of days and you look for prominent troughs. So when we did that over the weekend, there are two obviously fairly prominent troughs. There's this one, which is the most obvious one, the March 2020 trough, but there's also a fairly prominent trough over here, which is, I think that's in October of 2020. It's a little later, but it is also a fairly important trough, as can be seen on this chart. Now, most people would argue that the obvious trough is the March 2020 trough, and most of the time I would agree with you, but there's an important part of the analysis process that we need to go through, as defined by Hurst, which is that you do need to mark each one of these troughs, because sometimes it is not the most obvious trough that is the correct trough. And so something quite interesting happens here. If we measure forward from the 2009 trough, if we measure forward by the known number of days, 3,276 for the 9-year cycle, you will see we end up in a bit of a grey area. And so what we do is we skip that trough and we find the next really prominent trough, which is this one over here. And let me zoom in a little bit so that you can see this a little more clearly. If we measure the number of days from this 2016 trough, and now we are looking at the 54-month cycle, the average length of the 54-month cycle, as discovered by Hurst all those years ago, was 1,638 days. And if we do that, you can see that we find an ideal position for the 54-month cycle trough to form over here in about the end of July or early August 2020. So again, if we're looking at that position, we see two potential positions for that 54-month cycle trough, and that's over there and over there. What is the possibility, the unusual possibility that I'm going to suggest? If you cast your mind back to early 2020, and if you take a look at the market update videos that I was recording at the time, you will know that I was speaking about an important 54-month cycle trough coming in towards the middle of the year, in about June. And so my expectation was that that trough should form about then. And you can see it very clearly in the FTSE, as we've just done in terms of measuring the cycle lengths. Now, of course, the very big trough did form possibly early in March of 2020. But is it possible that, in fact, this really deep trough that formed in March of 2020 was influenced by what was happening around us at the time, which was, of course, the outbreak of the pandemic? Is it possible that the outbreak of the pandemic threw the markets a little bit out of kilter, and the price came down further than might have been expected if they had only been influenced by the cycle action? It is possible. It's a fairly unorthodox idea, as I've mentioned, and every time I bring it up, it ruffles some feathers and people say that this is nonsense. But it's an interesting idea to consider, I think, in terms of the FTSE, that this really strong move down was accelerated because of what was happening in the news, in particular, of course, the pandemic, and that trough was only a trough of 20-week magnitude, and that the correct position for the 54-month cycle trough was this trough over here towards the end of October in 2020. So it is an interesting idea, I think you will agree. And if we zoom in, there are a few things to look at here. If we consider this possibility and we zoom in, then what is happening at the moment in the FTSE is that it is coming down into the first 18-month cycle trough that has occurred since this low point in October. And if we count the number of bars, you can see there have been only 493 days since that trough. So we've still got another 50 days to go until that 18-month cycle trough actually forms in the markets. And if we count the number of days since the 40-week cycle trough, you can see there have been 231 days. And so again, we've got about another 40 or 41 days to go until that trough forms. This analysis doesn't really have the anomalies in terms of the fact that the markets are turning bearish at the moment. of course, they would be expected to turn bearish because they're coming down into this big 18-month cycle trough that, according to this analysis, is only actually expected towards the end of April or perhaps early May or towards the end of May. So I think this is a really interesting idea. I look forward to hearing what you think about it. If we zoom back out again and take really quite a longer term view, let's consider this sort of period of time over here and take a look at our semicircles. You can see that the semicircles work fairly well in terms of the position of the cycle troughs in the markets. We have a few unusual positions, but generally speaking, it looks fairly good and clean as an analysis until you get this sudden drop down here, which, as I've mentioned, might possibly have been caused or exaggerated by what was happening in the news at the time. And so perhaps we should be focusing on this trough here in the FTSE as the more important trough than the March 2020 trough. Certainly it makes a little more sense out of what is happening in the markets at the moment. It's an interesting idea, a little unorthodox, and I know some of you are going to object vehemently, but I thought I would bring it up and see what you thought about it. I do hope that you found this market update useful and interesting. If you have any questions, please put them in the comments below the video.